welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down or sideways by taking only high probability and low risk trades that have maximum forces from the market, sector industry, fundamental, technical and even seasonality in their favor. I will revisit some trade ideas or market analysis I shared recently and review how that played out. If you stay with me, I will show some stocks getting ready to buy or short and some that you may trade on Monday. You could also trade them on Friday near the close if you could find them in real time. Using Q systems, you could. Are you looking for trades randomly? There is a better way. How do you look for swing trades? When do you do that? Do those align with what the market is saying? Novice traders have no well-defined way of timing to look for trades. Well-defined way or timing to look for trades. They may look for trades when they have time. Experienced, profitable traders follow a different approach. How does one look for trades? Some rely on the media news, some try to take trades influenced by geopolitical events or macroeconomic events, some look for tips. I am quite confident that most, if not all of you watching this video, do not fall into any of the above categories. You would have a defined workflow to look for the trades, as I do as well. Technical traders run scans to find trades. Some try to find it after the close using an end-of-day data feed. I prefer to use real-time data feed that gives me the option of finding and taking trades just before the close or finding trades after the close and taking them the next day. I like the choice that comes with real-time data feed. If you are not a mere technical trader but also look at industry score, fundamentals, seasonality, etc. to find 360 degrees trades, then having only real-time data feed is not enough. All your trading systems need to be 100% real-time too. I designed Q systems with that in mind. Whether you are a mere technical trader or a 360 degrees trader, you have the choice to find and enter trades when you want to, before the close or the day after the close. Having that choice increases profit over time. That is my experience. I know when to look for swing trades near the close, signal day, and when to wait for the next day, the day after. I prefer to enter the trade on the signal day if the market is generally directional or closing with a strong directional bias. If the market tends to flip-flop from one day to the next, or if the market level shows nearby resistance support, I may enter the stock trade the day after the signal day. There is no randomness in that choice. Before entering the trade, you need to find it. Profitable traders follow a systematic approach to do that. There is no randomness in their workflow. Top-down workflow is an effective workflow popularized by many, including IBD, HJSI, and many great individual traders. Bottom-up workflow is equally effective. After all, You may not take a trade if the technical analysis does not give a buy signal, however good a stock's industry or fundamental may be. That is why a bottom-up workflow also makes perfect sense. Some may also follow fundamental first and less so seasonality first workflow. Those make sense too. Now the question to reflect on is this: do you use only one of those workflows, or do you use the one that suits the current market situation? Notice I said workflow that suits the current market situation. There is no randomness in that. This is how I do that. If a sector or industry is exceptionally strong or accelerating, I may prefer to buy in that sector or industry. That may be the case if macro events, government policies, geopolitical developments, or central bank decisions, etc., support one sector or industry over the others. In that case, I use the top-down workflow. There is no randomness in that choice. If technical breadth from QFinder tells me to look for specific trade types, I may follow the bottom-up approach. For example, if QFinder shows alerts from bullish headwind and green candle low (GCL) in an oversold market and the availability of many reversal buy setups, yes, QFinder can show all of that visually. I like to start with technical reversal buy setups in that case. That is when I use the bottom-up workflow. There is no randomness in that choice. If Q systems show that value stocks are doing better than growth stocks or vice versa, then the obvious choice may be the fundamental first workflow. That choice is also the case when I am not confident of the market's bullishness and prefer to buy high dividend yield stocks. I then start with value or growth, as the case may be, or high dividend yield stocks in the universe of liquid stocks using QVital. I use fundamental first workflow in that case. There is no randomness in that. If a market pocket is doing better, or if not if or is the only pocket that is not overbought yet, I may start with stocks in that pocket. For example, if small cap stocks are outperforming and are not overbought while others are overbought, I may like to start with small cap stocks. I start with finding the constituent stocks of Russell Index RUT using the Q index. I use index first workflow in that case. There is no randomness in that. I explained specific situations that may call for top-down, bottom-up, fundamental first, or indexed first workflows. If none of those situations are obvious during the market level analysis, I use either the top-down or bottom-up workflow. I tend to use the top-down workflow when I need to find trades faster, a tiny bit faster, e.g. just before the market closes. Top-down saves a few minutes by eliminating many stocks quickly. I use bottom-up when I want to start with my favorite setups and patterns. For example, breakout buy setups from a squeeze move pattern and at a price extreme low pattern. That is one of my favorite patterns. If it is at or near jump thrust low, then even better. When I have enough time in my hands, I like to use bottom-up workflow so that I focus on the patterns of my preference first. There is no randomness in that. Are those approaches cast in stone and one needs to follow that rigidly? No, that is not the case. Those are broad guidelines that I have found useful over years of swing trading profitably. You will see me using one workflow or the other depending on what the market tells me during the market level analysis. And the market level may tell me to focus on two or more angles rather than one. I will adapt my workflow accordingly. What workflow am I going to use if I am finding trades today? I will share that later in the session. I am going to listen to what the market is saying and follow that. Choose my workflow accordingly. There is no randomness in that. Q systems allow me to be responsive in that way. That responsiveness has added to my profits by finding the best trades quicker and ignoring the other mediocre trades. Greetings. I am Sagar Nandi, retired IT professional swing trading stocks in the USA as well as India markets using only one trading systems and techniques Q that I developed myself. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle superiorprofit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and TradeStation platforms. It has multiple components. I'll use several of them in today's session. Now let's start looking at the market, starting with dollar index. 2 weeks ago, this is a slide that I shared of dollar index in the market recap, and I clearly highlighted my anticipation of dollar index moving up from there. How is dollar index today? Let's read the chart. In the weekly, it came to watermark support, created a false downside breakout. That was when, just when it was about to create the false downside breakout, I was anticipating it to go up based on the watermark support in weekly and many signals in daily. Since then, price has nicely gone up. What were the signals that I saw in daily to anticipate that up move? Firstly, it had the unique bullish headwind, possible reversal signal, followed by a bull release signal, which came at jump thrust low, an unsustainable low price level. Price retested the watermark created by the bullish headwind, displayed the bullish indecision cluster, another bull release came, then came the bullish flow and price rapidly went up. Now it is near the upper boundary. We have two indecision candles in a row indecisive in shape, and we also have bearish indecision at the top. Weekly is somewhat indecisive, though overall we have to say weekly is bullish. Daily is overbought for too many days. I would have bought dollar index right at the bottom 2 weeks ago. If I was trading this instrument, this cannot be traded, probably it's an index, but if it was a tradable instrument, I would have traded it using short put vertical 2 weeks ago when I expressed my anticipation that it would go up, and I would book profit by now, at least partial profit, and I may put trailing stop on the remaining position. There is no bearishness, there is no bearish setup, so I'm not going to short dollar index, but it is overbought. If it pulls back from this level, it may help the market. Doesn't always work like that, but that is the general consensus. At least some influence it will have on the market's bullishness if it comes down. There is another instrument that influences the market a lot, similar to dollar index, that is mega cap index, that is the mega caps. What is mega cap index telling today? In the weekly, it displayed the bearish headwind, possible reversal signal that in fact caught the very top mega cap custom index in Q market breadth. Price fell from there, found support in the weekly trend line support. Price went back up and tested the watermark created by the bearish headwind signal. This is not uncommon. If a bearish headwind can push price down, it is not uncommon to see price trying to retest the watermark level created by bearish headwind, and then it may drop again. Currently we have a bear release signal and an indecisive shape candle. Not enough bearish signal in weekly, but at least the uptrend has stopped where one would expect it to stop based on Q systems. If you notice the relative performance for last 4 weeks, mega caps were outperforming the market. That has changed. It's kind of rotation, if you would like to call that. Mega caps are now underperforming for this 1 week. While that is happening in the weekly, in the daily, price came to the bearish indecision cluster, which was followed by multiple bear release signals. Price stopped at the watermark resistance. We also have a trend line support, so it is inside a narrow sideways move. Upper edge is defined by watermark resistance, lower edge defined by trend line support. On Friday we have an indecisive shape candle with bearish color. We can see relative performance is tilting down as we saw in the weekly as well. If the trend line support can be broken, that may be a time to short some of the mega caps or stocks that are heavily influenced by mega caps, for example NDX or QQQ constituent stocks. You may keep an eye on that. There is no bearish setup yet, but it is starting to underperform the market now. Let's now look at market breadth, invaluable in assessing the internal health of the market and anticipating a change in market direction. Composites. Nasdaq and NYSE composites. I'll not read the entire chart signals. I'll just focus on a few areas. You may pause the video and read the other signals later. The 3-month new high-low oscillator works like a clockwork. Every time it comes to the extreme overbought area, the indicator pulls down. Not the market, but the indicator pulls down, meaning at least some stocks are coming down from high price level. That happened. All the cases that we can see on the current chart display. And that has happened again as of Friday. 3-month new high low is extremely overbought. That will tell us to avoid buying NYSE stocks. For Nasdaq, 3-month new high low is not overbought. Nasdaq is continuing to lag, same as last week, same as 2 weeks ago. NYSE is overbought. Look for reversal signs in stocks that are overbought in NYSE, but no short signal yet. Overall, enough non-overbought stocks should be available for buying looking at Nasdaq. Let's look at the total market breadth view, the broadest view of the market. The 3-month new high low is now very close to extremely overbought condition, similar to NYSE. That is a reason to be cautious, and another reason to be cautious is the Hindenburg signal, and we saw the breakdown of the Hindenburg in NYSE and Nasdaq composites in the previous chart. I did not go through that in detail, but an Hindenburg warning has come. That is also a reason for cautious. It's not a confirmed Hindenburg in Nasdaq yet, but in any case, the 3-month new high low is a reason to be cautious. Percentage of stocks above 50-day moving average is not overbought. There is no preference between growth and value and small cap versus large cap. If we are looking to buy, we may be agnostic of those dimensions. If I look at a glance of the total view, the broadest market view, custom index, weekly has robust trendline support. Weekly closed right at the very high. When that happens, whether it is total view or any ETF or futures, it closes at or very close to the high of the week. Next week, it tends to go up more than come down. And this is broadest view of the market. That is telling that we still have some upside left in the market. In the daily, we have multiple trend line supports. We did have a bearish indecision cluster and then bear release signals that succeeded in pulling the price back little bit, and then price recovered again. In fact, total view in both weekly daily we can see made a new all-time high. Why I came to the at a glance view of total view is to show that there are many supports nearby, the trend line support and also the yellow direction line support. Even if total view comes down next week, it will not allow us to short anytime soon, and from my experience it will not be in one go that it will break through all the nearby supports. That usually does not happen. When I have no easy shorting possibility, I am looking for longs. That is what I am gathering from this at a glance. There is no easy shorting possibility. I rather stick with my longs. Total view closed near the very high of the wick is more likely that it will go up than not. At the same time, there are cautions from 3-month new high low in NYSE and also in total view. And if I look at the major indexes, Dow Jones Industrials is very overbought in terms of percentage of stocks above 50-day MA and 3-month new high low both. Nasdaq 100 extremely overbought in terms of 3-month new high low. Same is true for S&P 1500 and S&P 500. The only major index that is not so overbought yet is Russell 2000 IWM, which was underperforming the market, so we would expect it not to be overbought, but it did close very strongly on Friday. Later on we'll look into IWM in more detail. From here we can see there is a possibility to buy not in other pockets of the market but small cap, but we need more market level analysis to see whether we should buy, short or stand aside. Let's continue with that. Continue with markets external view. Market ETFs using performance finder. I have put all the market ETFs, the major ones here, and this week I use the daily interval to show what? That over 5-day period, that is 1 week, IWM is the worst performer. It is up. All the market ETFs are up for the week, but IWM is the worst performer. Whereas period 1, daily period 1, that is 1 day on Friday, IWM is the best performer by far. More than double the percentage up move of any other market ETF. That is the strongest by far. There seems to be some rotation from mega caps. We saw earlier from mega cap custom index that it is now underperforming after outperforming for several weeks, and small cap was underperforming for a few weeks. This week as a whole it underperformed, but Friday it superly outperformed. Combining with the breadth insights we saw, that is small caps are the only pocket that is not yet extremely overbought, it may make sense to look to buy small caps and avoid the other pockets. Let's look at the ETFs now in detail to see whether buying or shorting is preferred from the external view, or should we stand aside. SPY. What I mentioned about total view is true for SPY also. Closed right at the top of the week. Usually next week market tends to go up more. It has trendline support in daily, and the same is true as was in case of total view. Even price tilts down from here next week, there are too many supports, trendline support, yellow direction line support. It is unlikely that price will pierce through all of them in one go. Therefore, it is not going to be easy to find swing short trades. In that case, I am going to look for longs. Not in SPY, but in small caps. That is the conclusion so far, but let's continue. QQQ has trendline support in weekly, multiple trendline supports in daily. did display the unique bearish headwind reversal signal from where price pulled back little bit and then it went up again very close to the watermark signal created by the bearish headwind. It is not uncommon, as I mentioned, as I showed, if price can come down from bearish headwind, it is not uncommon to see price retest the watermark created by bearish headwind and may come down again. Now here, even if it comes down, there are too many supports. I am not going to find easy shorting opportunities, not in QQQ as a whole, but if it comes down, probably the mega caps will come down. Mega caps will break the trend line support before QQQ does. That will confirm continued weakness of mega caps, and there may be some shorting opportunities there if all those things happen. As far as QQQ is concerned, there is no nearby shorting possibility. It seems to me that QQQ will go up, make a new all-time high before it comes down. That's just a feeling I have from how QQQ is moving. In any case, this chart has no sign of bearishness, just like case of SPY. Will megacap put pressure on this? We may watch out for that. DIA, weekly trend line support, daily trend line support, closed right at the high of the week. More likely it will move up from here than down, and even if it comes down, it will find nearby supports from direction lines, trend lines. It may not be easy to find shorting ideas. I am more inclined to look for longs, but these pockets, Dow Jones, Nasdaq 100, S&P 500 and NYSE, all are extremely overbought. I am reluctant to buy in them. Yes, they are bullish, no doubt about it, but I am reluctant to buy in them. Now let's look at IWM. Let's first look at what I shared about IWM in the last market recap. It came near yellow direction line support and it was below trend line resistance. It was inside a triangle pattern in that way, but it did display the bullish indecision cluster. The weekly was also indecisive in shape. I was not going to trade it until it broke out in either direction. Now the bullish indecision cluster gave a little bit more likelihood that it would break out to the upside. That is what the signals told. We did not have any confidence to trade IWM either way 1 week ago. This is from last Friday's presentation, but I would expect it to go up more than come down because of the bullish indecision cluster. Let's look at IWM today. The yellow direction line support proved valuable. Bullish indecision cluster proved valuable. The triangle pattern is now broken to the upside. Friday had a massive rally in small caps. It outperformed the other market ETFs after a long time. Now it is clearly bullish. It is not overbought. In fact, IWM as an instrument is giving a breakout long setup. That is a case to look for buys in small caps. Bucket analysis and sector industry stock breadth using QH helps to decide preferred trading direction that may be different from the current market trend. Bucket analysis. 59% of stocks in QH S&P 1500 are above mid-Bollinger Band, that is bullish. Is it overbought? Percentage of stocks above upper Bollinger Band is only 9.4%. It will become overbought when it hits 30-40%. It is far from there. So it is now bullish but not overbought. Supports buying, does not allow shorting. Sector industry stock breadth. Longer term 1 month period is bullish. Also longer term 10-day period became mixed. It weakened. This week's 5-day period improved little bit. And then the real bullishness came on Thursday, Friday and Friday over 2-day and 1-day period. This strength over longer term period, bit of weakness in the middle and then strength again in last 1 and 2 days, also 5 days, little bit more bullish than bearish, that allows buying, does not allow shorting. It is not showing an overbought condition. Bucket analysis did not show overbought condition. This supports buying, no shorting. Technical breadth, invaluable in deciding preferred trading direction from breadth charts and then find unambiguous technical setups for individual stocks. Weekly picture, all setups bullish, strength setups bullish, trend continuation bullish, reversals are mixed. There is no bearish headwind alert. Weekly technical breadth allows buying, does not allow shorting. Daily technical breadth, all setups bullish, strength setups bullish, trend continuation bullish, reversals bullish, bullish all across the board. Nearing overbought condition. When this percentage hits 50% or more, what is this percentage? Percentage of stocks giving bullish setup that are already at price extreme high. If it hits 50% or more, that is an overbought situation. So this is the second area where we are seeing overbought alarm. We saw the other one from market internal health check market breadth. Not there yet, but very close to being overbought. Doesn't allow shorting, of course. If at all, it allows buying. And looking at the skyscraper here, large percentage of flow trade setups. Remember what I explained about starting with different workflows. We saw small caps are likely pocket of buying that may allow me to look for index first workflow. And here I see flow setups are many more on the bullish side that may call for bottom up workflow. I'll carry out an investigation later and choose one of those later. Let's continue. So far we saw technical breadth also allows buying, no shorting. Market level summary, look for 360-degree buy candidates, preferably in small caps. Look for weakness in QQQ and constituent stocks at high price level, those influenced by mega caps and mega caps themselves, but avoid shorting until there are bearish signs across the board. It is not yet a time to short. By the way, in the last market recap, my market level summary was equally unambiguous. I avoid making unambiguous market level summary, like if this happens, then it will be bullish. If that happens, that will be bearish. Uh, those ambiguous market level summaries are of no use to an actual trader. Last week, my summary was very unambiguous that it was bullish, and this week that came true. If you follow my market recaps regularly, follow my tweets regularly, you will see those come true more often than not. That is the open secret behind trading profitably and consistently. We'll see how this plays out. Doesn't have to be accurate every week, but the point is that the summary has to be unambiguous, either long or short or stand aside, not if this so this or that so that. That doesn't help a trader. Let's review last week's trade ideas. These sessions are not meant to be stock tips, so I don't share a lot of trade ideas in these sessions. It's meant to be an explanation of how I trade profitably using live systems. Last week, I shared only one trade idea, that was ACMR. This is the stock. I shared it on this day as a gap and breakout candidate. If I look at the historical chart in Q Elite on TradeStation, no, okay, it was a gap setup, and let's see, it was a flow and gap buy setup. Because it was a gap setup also, the stop would be just below the gap candle's low. We would not put stop so far below. If we consider putting stop that below, that far away, then there is no swing trade here, but gap trades allow us to put stop just below the gap candle's low. So this would be the entry price. Monday it shoot up and stop right where we would expect it to stop, at or near the watermark resistance. By that time, much more than the risk distance was covered, and one would book profit in the trend. I mentioned in the last market recap that I did not have a long position. I did not find it near the close on Friday. And that brings me back to the point of when I like to find trades. If the market is generally directional, that's what I said. If the market is generally directional or closing with a strongly directional bias, that is what happened 1 week ago on Friday in the market recap. My view was unambiguously bullish. So if I found a stock like ACMR on Friday, I would buy it. It had a strong directional bias on the market level as well as the stock level, and I would book profit. But I did not buy it on Friday. I did not chase it on Monday. So I did not trade it. Now it has come down. That also shows the importance of booking profit in swing trading when we have the profit. For swing trading, I like to book profit, at least partial profit, at 10% or even at around 5% for slower moving stocks or ETFs, for example. More important reason for me to book profit in this case would be that it covered much more than the risk distance. So how I do that? Once I take a stock long position, I tend to place a GTC OCO, good till cancelled, one cancels other, profit booking as well as stop loss order. Almost all brokerages I know in the USA allow us to do that. You can do that in Schwab, TradeStation, all platforms, I think. So I always put a order like that, OCO order, GTC order, and that would have hit if I bought it on Friday. Only one trade idea I shared last week, that closed with a profit. I would think that is quite impressive success rate. Helps my trading profitably. Let's go back to this week's theme. Do you look for trades randomly? There may be a better way. Let's find this week's trade using a sensible, intuitive approach, not randomly looking for trades, but using what we saw so far in the market recap, what we saw market is saying, listening to that, and find trades accordingly. Use a workflow accordingly without any randomness in that. Let's find at least one trade idea this week. This is a stock. I bought this stock on Friday. Again, going back to this point I shared, if I think the market is bullish or is having a strongly directional bias, I prefer to find the trade before the close and take it. ACMR I did not last week, but this week I did take this stock. Looking good, isn't it? This stock has a flow setup, has beautiful trend line supports, regained the yellow direction line support. Now, how did I find it? How could you find it in real time? I did, and I already bought the stock. And whatever be the outcome of this trade, stop is narrow, quite bullish to me, I would consider it as a great trade because it is a 360 degrees buy setup, not just a technical setup as we are seeing on this chart. Did I randomly look for it? No. I will now show you the steps I followed. And this is not the only workflow possible, but you will see I suited the workflow to what I saw was happening in the market. I did not try to fit the market in my rigid workflow like top down or bottom up only, which are also quite effective. I used those two as I explained, but on Friday I adapted my workflow to what the market was saying. Let's trace my steps before Friday, sorry, not Friday, on Friday before the close, how I found this trade up to the live systems. Small caps were outperforming. I opted for index first, wanted to have a look at the Russell 2000 constituents. Let Q index retrieve the constituents first from Refinitiv as it is doing now, and then I will generate a scorecard of the constituent stocks. This is exactly what I did on Friday before the close. As usual, during these market recaps live sessions, many programs are running. I'm in a village, my internet is not super fast. Computer is not the latest and greatest. So it takes more time during the market recap than my actual trading to find trades. Please bear with me. If you are watching these videos, you are probably used to bearing with me. Give it a few seconds more. I want to show you the exact steps that will probably explain the value of adapting the workflow to what the market is saying, not just rigidly following top down or bottom up. I paused and replayed it. Let's see if Refinitiv can retrieve the data. And while it is trying that, let me show something I'm doing. I have time. Sometimes I play around with the same systems and try to make it even more friendly, as if that was possible. You can see in the version I am using, not released yet, there are some differences in the smart action buttons. Some of them are mostly cosmetic. For example, the ones that, let me clear them, the ones that open the external programs from Q Edge, if they are not already open, they are having a black outline. So if we don't have diary open and we want to go to diary, this icon will not only go to diary but open it first. This will do the same for season, this will do the same for finder, this will do the same for vital. So I just played around with the outline to highlight that these buttons are different, not just going to an external application, that is the yellowish color, brown color, but also open the application if it need be. And then I have added one notes page that is mainly for some of my day trading. For day trading, I wanted to quickly calculate my sizes and I did not want to open the full diary that is used for swing trading. So I have a way to calculate the sizing in the notes page, and also some notes I may like to write down. Is this only for day trades I am using? For swing trades, the diary is the correct tool. And you can see some more highlighting outline differences not only here. If I go to vital, there are some changes in highlighting some of the smart buttons. I'll explain them later. Those may or may not be used by all the traders. Some of those functionalities were already there, like I explained, opening the application if it was not open already for vital, diary, etc. I'm highlighting the buttons that has some specific or special action possible. Let's go to Q index. Okay, it has retrieved it. Thank you, Q index. Now I'm going to retrieve data about all the small cap stocks in Russell 2000 and calculate a scorecard. Calculation of the scorecard is very fast in Q dives. What it takes me time sometimes is to retrieve the data because of my village location probably. So again, bear with me and I may continue explaining why I highlighted some of these buttons. They had some special actions possible, and again, those are useful for people who use dives exhaustively. Some traders I know do not use dives so exhaustively, so I didn't explain them all the time, but again, I had some time, so I highlighted them, and maybe over the course I'll explain some of the small things that help me execute a workflow or another. I'll also show you one more thing. We usually had only two color codes for smart action buttons. This orange, not brown, this orange color for invoking external programs, cyan for staying inside the same application. But you can see a new purple color popping up here. Why did I do that? Because, and this is small fun things for me. These are all context sensitive smart action buttons. So if I highlighted one stock, wanted to look at its seasonality, it would take me to the season program inside Vital. That's why it was colored in cyan color. But you also know that if you highlighted multiple stocks and click the same button which was cyan color earlier, it would then need to go to the Q season application. This season tab is for single stock. If I selected multiple stocks, the same button would actually take me to the Q season application. That's why I thought, okay, it may keep me in the same application or it may take me outside the application. It is not appropriate to keep it cyan color. I changed it to purple. That's the only smart action button with purple color. Good fun for me. And well, thanks to Refinitiv, the data is retrieved. So again, on Friday before the close, I saw the market. I wanted to buy small cap stocks, preferably flow setups. So I started with Q index workflow, created a scorecard of the Russell 2000 stocks, went to the scorecard. First thing I do is click 1 star. I'm going to buy either undervalued or high growth stocks. I saw earlier there was no preference. Either one would do. Look for the stocks that were up. And these are small cap stocks. They were languishing, not all of them, some of them. So I thought I have the ability, why not look for stocks with short squeeze potential. So I did another single click. How many stocks do I have now? 595 small cap stocks that were up on Friday near the close with a short squeeze potential and either undervalued or high growth. Now I wanted to look at their industry score. And I saw Russell 2000 was underperforming earlier and even this week until Friday. And Friday it hugely outperformed. That looks like an instrument that is accelerating, not necessarily stronger than others, accelerating. So here I wanted to look for industries also that is matching that. I am listening to what the market is saying, adapting my workflow. Instead of looking for strong industries, I looked for accelerating. And yes, some of them happen to be strong industries as well, but that was not my focus. I looked for accelerating industries and filtered the stocks into that. How many? 138. And see, I am doing this before the market close. The moment I find a 360 degrees buy setup, I'm going to buy that first before looking for another trade, if I am happy with the trade, of course. Whereas if I'm finding trades after the close, I can of course find multiple trades and then choose a few of them or only one of them depending on whatever be the case. But in this case, I'm left with 138 stocks. So far, what are they? Small cap stocks that is outperforming the market, was outperforming on Friday. Up stocks, short squeeze potential, either value or growth in accelerating industries. I looked for their technical setups. Using Q Finder, look for stocks with trade setups only, and Q Finder told me it would be easier to find 360 degrees trades from flow. So I did that. How many stocks I'm left with? Only 9, starting with Russell 2000 stocks. Well, I sorted by price extreme level. I am not interested in buying the stocks at high price level. I am left with 7 stocks. I looked at their seasonality. I still had some time left in my hand before the market closed, before buying, or rather before looking at the chart. See, still I have not looked at the charts. I have now 7 stocks left and it is earnings season starting soon. Some stocks might have announced earnings. So I wanted to look at their seasonality. Not a requirement for me, but I have the tools. And this is what I just explained. If I have multiple symbols selected, I look for seasonality. It will take me to the season application. Generated the seasonality. Let's look at that. We are in October. There is no bullish seasonality for any of these 7 stocks in October. Okay. What about November? November, and I'm going to look for strong bullish seasonality. October is neutral for all of them. November, I can see we have only 2 stocks with strong, meaning either 80% or more bullish seasonality. And how many years of data is available? The stock AKTR has only 8.3, slightly more than 8 years of data available, recent IPO, whereas TTMI is retrieving all the 20 years of data. The seasonality can be calculated based on 20, 50 years, both of them are possible. Here I calculated using 20 years, and TTMI has enough data to make the seasonality use confident. So I am left with one stock. Now I am going to look at its one-page scorecard. What have I found so far? Interesting, isn't it? I found a small cap stock. Why small cap? Because that was outperforming. Stock that is, okay, we can have it here. A stock that is value or growth. Here it is value, and I can see it as a nice earnings growth, reasonable revenue growth, which is also accelerating. I looked for short squeeze potential. It's a profitable company. I like to buy those stocks. And remember, it had strong bullish seasonality in November, and I can now somewhat understand why, because the earnings is right on 30th October. So when I'm looking at all this very quickly using visual signals, excuse me, I am thinking that I may hold the stock across earnings. This is just beginning, middle of October actually, 13th of October. 30th of October is the earnings. November has very strong bullish seasonality. I may look to hold it longer. Put my stop accordingly or use short put vertical. 96% of peer stocks are up on Friday. That's an industry I'd like to buy. And we already selected an accelerating industry, and this is the time to look at the specific industry, that is electronic manufacturing services. How is the scorecard? I looked for accelerating industries, and I found happily that it was not only accelerating, it was one of the strongest industries also. That was the time I opened the chart. TTMI. I could do that in Q Global also. Let me do that. I want to show you one more thing. This is my live analysis near the close on Friday to find the trade that I bought using a workflow that I adapted by listening to what the market was saying. Let's change it to TTMI. This is what I saw. I shared the daily picture already. Bullish flow setup. The weekly supports that. Weekly has a very nice breakout. Looking back, the bullish headwind and the bull release and the big move up 3 came on the same day. In fact, I traced back. That day was a buy day. That was a bullish headwind buy setup day as well as a box double bottom buy setup day. In any case, I didn't find it at that time. I found it on Friday. Weekly daily looked good. Fundamentals looked good. Technicals looked good. Seasonality looked good. And why I came to Q Global is to show the momentum. And you can see I have plotted the stops also there. But let's look at the momentum. It does have a traditional squeeze. It also has some momentum signals, 2 of them. The momentum signals are nice to have for me. I trade based on the Q signals that allowed me to buy. I completed my study before continuing with the next stock. I placed my buy order. I got a fill. I placed my GTC order after the market close It is OCO as I explained, but that is how I found the trade. That is how I traded it. That is how I used a workflow that is adaptive to the market condition. If you carry out the 360-degree analysis using Q like that, you will most likely find other trading candidates today just as you would almost every other day. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend. As I always say, as these live examples and my tweets, I'm quite confident shows there is no reason not to do that. Trade profitably. Thank you, and thank you, Ralph. I'm happy to see someone watching the videos live. Thank you. Not so lonely then. Thank you. Have a great weekend. Take care. Bye bye.